Hello YouTube, this is Stephen with On My Way to Fire, personal finance channel about early retirement and investing. And today's topic, I want to talk about the V-shaped recovery that we're having right now on the S&P 500. We had a record close a week ago, and this last Friday it closed even higher. So it did hold. And even today, as of this recording on Monday morning, April 27th, we're seeing the market just ticking up just a slight bit more for another record. We'll see if it closes higher or not, but even with oil prices rising, situation in Iran not solved, it goes to show that the market can come back rather quick. And if you sell during a market downturn, it's very difficult to time it to get it back in. So pretty much my opinion on this, my market perspective, is to always be invested and to be trimming off the top. And if you have the ability to view the lots that you have purchased, you can look to see what price you paid. And so typically when we have a really big rally, I'll look at the shares that I have and I'll try to sell the highest cost shares and get that back as cash, get the minimum profit on those shares. And then what I can do is I can wait for the next drop, and it might even be in another sector. You know, the S&P 500 is a general 500 companies. It's a big mix of different sectors. So you can look at REITs, financials, technology. Something else might be down while something like the general index is up. So when we look at a V-shaped recovery, let's think back to about a month and a half ago. You know, prices were pretty much dropping every day, slowly but surely, for probably close to a full month. And then right at the end of March, we saw a big rally the last day. And then going into April, it just kept continuing. And even though the situation in Iran hasn't been resolved, the market continues to go higher. And I think we've got a couple different factors. The first one I'm thinking of is short covering. We've got a lot of investors and big money. They will short the market and sell while things are going down, putting higher pressure on the market. And if there's not enough buyers, the price will just keep going down. And then, you know, at a certain point, they're going to decide to put money back into the market, and now they're bidding it back up. And for people who haven't covered their short yet, they have to buy back to get in. So if they're early on the buyback, they're buying while it's still low. And maybe it does go lower for a little bit, but once the tide turns and all the momentum is on the upside, suddenly everybody's trying to buy at the same time. And I think that is a big factor of what's happening right now. But we really don't know because we don't have inside knowledge to these big firms, these big investment companies, and how they're positioning themselves in the market. So what I do is I also look in the financial news to see who's making waves. And there's a guy named Michael Burry who did the Big Short back in the probably 2006, 2008 time period. And he made a lot of money by shorting the mortgage bonds and the companies related to the mortgages. So he's always kind of a doom and gloom type of guy, saying negative things. And, you know, he was right once 20 years ago, but he's typically wrong a lot or delayed with what his, forecasting is. And so he made some opinions probably about 6 or 7 months ago about the AI companies and some of the software stocks. And so he was selling those short, and it did actually start the momentum of those stocks going down. So this last time it did work for him. But what's interesting is in the last week, he's disclosed that he bought into Microsoft and some other companies. So by the time that information comes out, he's already done that probably a few weeks or a month earlier. So it's interesting to hear that perspective suddenly shifting to now he's a buyer. So, you know, take it for what it is. He's an opportunist. He was right once 20 years ago. I don't really have a high opinion of him. He also sells a Substack subscription where you have to pay to get his newsletter. So I feel in a way he's just like a shameless self-promoter. And another little bit of information about him is going back probably around that time period of when he was announcing the stuff in October, November with the shorting the stocks. He closed one of his funds because he didn't want to deal with people asking for their money back. So it's called a redemption when they're trying to get out of the fund. And so he's going to have to sell, and he might not have the opportunity to sell at a good price, but he has to redeem those people to get them back. So I don't know if he shut it down completely or just shut it down to new investors, but that's interesting. So overall, though, we saw the slow drift down, but we saw a huge spike upwards. And, you can get caught off sides, as they call it. So I've heard a few shows on Bloomberg and CNBC talking about how investors were caught off sides. But, who are they talking about? It's so general, you don't really know if it's big companies or just individuals like Michael Burry or other people like that run big hedge funds. So it's interesting how these things change. And I want to do a video later about the financial industry and how they use certain jargon and buzzwords and just repeat them to death until they change their momentum and, suddenly, instead of being negative like they were in the general market for this last month, suddenly now everything's positive. And, in terms of what's happening right now with the financial industry and the media, they're all pushing towards this narrative right now of upcoming earnings announcements for tech companies and other big companies announcing this is a big week. I think we have Apple and some other companies reporting earnings. And so far, for some of the companies I follow and I own, like Verizon, they did well. They beat earnings, and I think AT&T beat earnings too a week or two before that. So it'd be interesting to see. I think a lot of what's happening right now is we're going to see if this rally holds. It's going to be based on the tech earnings and these other big company earnings. And what's interesting in the past is stuff like this happens and the earnings are good and the stocks go down. And now we're waiting for the earnings to be good and we're expecting the stocks to go up. So, or at least hold. So I just think that's interesting that the whole expectation level has totally changed. And it's almost like the financial media and just the industry in whole of how they put these articles out on CNBC and MarketWatch. They shift their tone to suit what works for them and like an agenda of how they want it to go. So I don't know. I don't know if this is like a sucker's rally of whoever's left buying. Is it going to get the chair pulled out from underneath them or not? Or if we're just going to continue to go higher and then maybe have a little sell-off, a small sell-off of like 2 to 5% at some point in the summertime, or what's going to happen. But, I did consult ChatGPT and Grok, and I got some information about V-shaped rallies. And a lot of it comes down to if it holds. So I waited to do this video for another week because I wanted to see if it was going to hold from the 7,100 S&P closing. And then we had 7,165, and then I think today it's at 7,170. So, it's one of those things we have to just wait it out to see if it really does become a classic V-shaped recovery. But regardless, we've seen the momentum of the market shift to a positive tone, and I think everybody's trying to pile in. And to me, this is a sign where if you do have stuff to trim, this is where you want to start selling a little bit to get that cash ready. If you have bills to pay, if you have interest on credit cards or other debt, this is where you want to pay it down. And then you'll have opportunities throughout the year. One thing I've learned through trading for over 12 years now consistently is not to get caught up in the day-to-day and, set aside a little bit of money where I can buy and then have my watch list of the companies that I like. And then every so often something else will go on sale that I can buy. And, in some cases, like with some of the oil and energy stocks, if you go back about 2.5 years ago to about a year ago, they pretty much just went down and drifted lower. It had small rallies, but didn't really do anything. And I just held on to them. And so within this last probably 2-month period with this Iran situation, now I'm starting to sell them at good gains. And it just takes a lot of patience and timing to just say, okay, I'm putting it away. I'm buying 2 shares today, put it away. I'm going to buy 10 shares today, I'm going to put it away. You don't get caught up in seeing it down 20%. You start asking yourself, okay, if I get another $100, how many shares can I get of which companies? And so that's how I've changed my mentality to always be ready to buy when good quality stuff is on sale and not get caught up in the day-to-day market. So let's see what the rest of 2026 brings, and I hope everybody's doing great, and we'll see you in the next video.